Stock investing has become more accessible, with beginners able to open an account with little money using a brokerage's website or mobile app. As a common shareholder, stock represents an ownership stake in a company. Shareholders of common stocks can vote on company issues, with most companies allowing one vote per share. If you want to learn how to invest in stocks straightforwardly, this video is for you. Hello and welcome to Money on the Wall, your daily guide to making money by spending money. Today, we discuss the significance of selecting a suitable broker and developing a risk-averse strategy, as well as which stocks to consider as a first-time investor. Step 1. Choose a broker for stock investing. Brokers act as intermediaries between you and the stocks you wish to invest in. As a result, before you can begin investing in stocks today, you must first open an account with a suitable broker. The most popular brokers in this space provide access to thousands of US and foreign stocks while charging low fees and requiring low account minimums. If you're learning how to invest in stocks for the first time, going with a user-friendly broker like eToro is a wise choice. Even if you have little to no experience with stock markets, you will find this broker simple to use. Furthermore, opening an account and purchasing stocks on eToro is very simple, usually taking no more than 5 minutes. If you want to buy Etsy stock, Lockheed Martin stock, or any other popular stock in 2022, such as Uber or Medifast stock, eToro is an option. US clients can deposit funds without paying fees once they have opened an account with this broker, which over 25 million people use. Furthermore, budget-conscious investors are catered for, with a minimum deposit of only $10. For example, through fractional share trading, investors can invest in DWAC stock, buy Samsung stock, Adobe stock, AT&T stock, NRG stock, XLA stock, and Nikola stock with low fees and low minimum investment. The most straightforward method of depositing funds is with a debit credit card or an e-wallet such as PayPal. Webull is another option for learning how to invest in stocks. This online stockbroker provides a user-friendly platform, as do its iOS and Android apps. Webull allows you to open an account quickly, and there is no minimum deposit requirement. As a result, Webull will appeal to those of you who want to invest in the stock market with a small sum of money. There are no fees associated with ACH deposits. Webull, on the other hand, charges $8 for domestic bank wire deposits and $25 for withdrawals using this payment method. There are numerous options in this regard, including traditional and Roth IRAs. One of this broker's main disadvantages is that it does not provide any passive investment tools, such as managed portfolios or copy trading. If you want these beginner-friendly features, you should look into eToro. Webull allows you to invest in cryptocurrency, in addition to US stocks. Numerous digital tokens are available, including Bitcoin, Ethereum, Shiba Inu, and Dogecoin. Webull also houses US-traded ETFs and stock options. Finally, while beginners primarily use Webull, it does provide a wide range of advanced trading tools and technical indicators. Step 2. Research stock investment. You can open a brokerage account and invest in stocks in minutes from start to finish. To invest in stocks, however, you must be willing to put your money at risk. As a result, it's best to first learn the fundamentals of the stock market before proceeding. The first thing to remember is that when you invest in stocks, you purchase a company share. Of course, this will be a negligible percentage in the grand scheme of things, but you will nonetheless be a shareholder of the company. The next thing to understand is the market capitalization of the company you are investing in. This is critical because market capitalization determines the company's value. This is calculated by multiplying the stock's current price by the total number of shares in circulation. If you are learning how to invest in stocks for the first time, we recommend that you stick to large cap stocks. These are usually well-established companies that dominate their respective markets and are much less volatile. For example, Amazon, Tesla, Microsoft, and Alphabet, Google, all have market capitalizations of more than $1 trillion. Most importantly, if you're looking for the most popular penny stocks to invest in, you should stay clear of this high-risk stock market sector. Because penny stocks are extremely volatile, you could lose your entire investment overnight. To profit from stock investment, the value of your stocks must rise. The value of your stocks, like any other investment that trades publicly, will be determined by market forces. Monday through Friday, the stock markets in the United States are open from 9:30 a.m. to 4 p.m. Eastern Time. This means that you can only invest in stocks during these times. This also holds when it comes to cashing out. Some online brokers now provide after-hours trading. Having said that, this should be avoided because prices are much more volatile due to the low trading volume. Stock exchanges are where publicly traded companies are listed. The NYSE and the Nasdaq are the primary two exchanges in the United States. If you want to invest in stocks listed in another country, you'll need to find a broker who can connect you to the market. How to find the most popular stocks to watch. We can now explain how to find the most popular stocks to invest in now that you have a basic understanding of how this trading space works. This is essential to the learning process, especially given the thousands of stocks traded on the NYSE and Nasdaq and even more on international markets. Because not all stock investments are successful, we explain the key factors to consider when constructing a portfolio. There are numerous investment categories to consider when learning to invest in stocks for beginners. Blue chip stocks, for example, refer to large cap companies that are both established and dominant in their respective industries. Johnson & Johnson, Visa, JP Morgan Chase, and Pfizer are examples of blue chip stocks. Blue chip stocks are less risky than other investment categories, though the upside potential may be limited. You should consider investing in growth stocks if you want much higher returns. These companies are still in the early stages of formation and frequently deal with products or services that operate in an unproven market. 5 popular stocks to watch. By following the above tips on how to find the most popular stocks to invest in right now, you can ensure that you are selecting companies that are compatible with your financial objectives. If you're looking for ideas on which stocks to add to your portfolio right now, consider the 5 companies discussed below. 1. Amazon. Amazon was founded in 1994, and the company went public 3 years later. The value of Amazon stocks has increased by more than 175,000% since then. This means that if you invested $5,000 in Amazon in 1997, your money is now worth more than $8 million. Although Amazon does not pay dividends, it continues to reward shareholders through continued growth that often outperforms the broader markets. Amazon stocks, for example, have increased in value by more than 235% over the last 5 years of trading. In comparison, the Nasdaq Composite Index has increased by 125%. 2. CocaCola. When you invest in dividend-paying stocks, you will receive a portion of any distributions, usually made every 3 months. Although you may be looking for high-yield dividend stocks, you should consider Coca-Cola, which has been making quarterly distributions for over 60 years. Furthermore, Coca-Cola has increased the size of its annual payment every year, making it the highest dividend king. As a result, investing in Coca-Cola stocks means investing in a dividend-paying company that has been consistent for more than 6 decades. Coca-Cola currently has a running dividend yield of more than 2.7%, which is competitive. Furthermore, the value of Coca-Cola stocks has increased by 20% and 50% in the previous 1 and 5 years, respectively. This is in addition to its ongoing dividend program, so investing in this stock allows you to increase the value of your capital on 2 fronts. 3. Coinbase. Coinbase, one of the world's largest cryptocurrency exchanges with nearly 90 million clients, is perhaps the most popular growth stock to consider today. This growth stock debuted on the Nasdaq in April 2021 at a price of more than $340 per share. However, the market appears to be split on this stock, with Coinbase's share price dropping by more than 50%. This should not deter you, as Coinbase has a solid framework to benefit from the cryptocurrency industry's ever-growing rise. 4. Walmart. It is also a good idea to include some staple stocks in your portfolio to mitigate the increased risk associated with investing in high-growth companies. These are stocks that sell products or services that are in constant demand. Walmart is an example of a leading staple stock. After all, Walmart dominates the US grocery industry, so its stores see consistent traffic regardless of how the broader economy performs. Regarding share price performance, Walmart stock has been up nearly 110% in the last 5 years. 5. Alphabet. Similarly to Walmart, Alphabet, Google's holding company, can perform well regardless of the broader economy. This sentiment was exemplified during the pandemic, when Alphabet, like many other tech stocks, experienced strong upward momentum. Alphabet stocks have risen more than 200% in the previous 5 years, outperforming the Nasdaq Composite by a wide margin. Growth has slowed slightly over the past year, with Alphabet stock up only 10%. Nonetheless, remember that Alphabet and Google are not solely reliant on search engine advertising. Here's how you can invest in stock where it will be more likely that you will end up with profits. We hope this video helps you if you're facing this problem. Kindly share the video with your friends and family. That's all for today. See you soon.